Good evening, trading world. It is still March 9th, 2023, although the wrong side of the clock. It's just after 10:15 p.m. on the East Coast, and this is my pre-market technical analysis for day trading the markets. With all the things that are about to happen overnight, I thought it would be best if I got things out early so that all of us would have an edge coming into the morning and that I could pretty much focus on trading from the beginning. The title of today's pre-market outlook: 3 reports to watch before you kiss this range goodbye. Before we get into tomorrow's things to watch, let's go back through key things in earlier pre-market outlooks that played key roles in the unraveling of the market. In Tuesday's pre-market, I said to keep an eye on financials, XLF, and the energy sector, XLE. With both of those sectors down, it will be a drag on the market. What led the markets down today? You guessed it, financials. On Thursday's pre-market, I noticed the 9-day VIX was higher than the spot VIX and the 3-month out VIX. A clear sign that trouble is here and now. Finally, the aligning of the big time frames in their rest areas, which makes it really cloudy as far as seeing the path, but made it just right to kind of hide or ambush us into this unraveling, if you may. Believe it or not, we still haven't gone anywhere. It's still just big time frame consolidation until 389 is broken. From here, there are 2 paths becoming clear to me. I'll talk about that a little later on in this outlook. Now that we're below market makers' weekly expected move, throw out the playbooks. With the financials entering 3 standard deviation territory, intraday levels don't mean a thing. What will be key for tomorrow is how European market reacts to their CPI and PPI. If they push us down further, it sets up a possible reactive bizzarro world bounce when it comes to our employment situation due out at 8:30 a.m. We've already gotten a heads up from unemployment claims that this employment situation will more than likely be bad. The market will see that as a good thing, thinking less ammunition for the Fed to want to raise rates on us. For some reason, traders seem to forget that the market is a future pricing mechanism, and the fact that it takes rate hikes 12 to 18 months to be felt by Main Street. I thought this was an interesting article and a way to kind of refresh my memory of how many rate hikes we've had. Going back to March of 2022, we have had 8 consecutive minimum 25 basis point rate hikes. That means shit is just now starting to hit the fan. And guess what? The Fed is still in raise mode. I said almost a year ago that the Fed is not going to know when to stop and continue until they break something. Well, consider something breaking now. A lot of professional traders are starting to reach for VIX calls to hedge portfolios now. And those $10 wide VIX call spreads I did by the boatload back in late January are starting to wake up. I usually give levels to watch for the day, but this is different. The only levels you need to be concerned with are the weekly market makers expected move at 396, weekly resistance between 400 and 401, and the main channels, the one that we're currently in, 397 down to 379, the one below us, 379 down to 364, and the one above us at 397 up to 416. Let's walk through how tomorrow and Monday may play out. If the market catches some type of a bid overnight, be on the lookout for the European CPI and PPI to pull the rug from under that bid. This could put us at a point where we come into tomorrow's pre-market with a huge gap down. This puts us in a mode where the market may already be overdone. So a bad employment situation could be the spark needed to roll the market on over or start a consolidation for our blow-off top type of rally. Remember, I have been waiting for a rally that rockets up at the same time VIX continues to rise. This is where we're going to pick up tomorrow's scenarios. All right. Picking things up at scenario number 1. We start with a good size gap down, begin to consolidate for the morning. That consolidation takes place between the overnight lows and whatever the high bar that we come to on the employment situation. The consolidation will take some time to play out. Let's say after about 10:30 a.m. If strength begins to pick up around this time, look out. We can have a blast off. And we'll need it because it'll take a lot of force to break through the 396-400 area. If we break through that area, nothing will slow us down the rest of the day. And we get this rocket up and pay close attention to VIX. And if VIX continues to rise while we still have this rocket up, it may be hell to pay on Monday. Now, scenario number 2 pretty much starts off the same. We get a good sized gap down, begin to consolidate after the open between the overnight lows and the highs after the employment situation. This consolidation will take some time to play out. Again, like I said, around the 10:30 a.m. area. Once consolidation breaks the next level, look for the upside at 396 to the 400 area. And if we go too late in the day consolidating at the 396-400 area, it could mean we're likely in for another spike lower. And from here, this is where things differ. If we get way out in the day here with this consolidation, we could get that V spike down to here. And that scenario 2 is going to look something like that. So again, what I'll be looking for is that if we take off like a rocket, this will probably be your last chance to get out of long trades for quite some time, and probably will be the best short of the year. I just wanted to get this out of the way early, like I said, so that we could all have an edge coming into the morning, because a lot of this stuff is going to play out very early. There's something that I say after or at the end of each video. Your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position that we take. And we manage that risk in accordance to our account size. Something else came into play this week as it pertains to risk management. It's not just putting stops on the size of positions, but it's also situational awareness. Knowing what type of market we're in, knowing when to hedge, knowing when to sit on your hands. And it is a big part of why so many traders don't make it. I just wanted to say that again because it is really, really, really important. I hope this helps. This is not the traditional pre-market that I do. There are no day types to be had when VIX really starts to rocket and kick it in gear, especially when short-term VIX goes into backwardation. It pretty much means buckle up. It's about, or it's not about, it's dangerous now. So again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.